Oh, good.
Hi, ladies and gentlemen. Welcome to another episode of BrilTalks. This is Jairam Rajaram, managing partner of Brill. So today I have a very special guest here, from Sydney, Australia. He is the co-founder of Simply Wall Street, one of the world's best visual insights tools to analyze stocks. Present to you Al Bentley of Simply Wall Street. Thank you, Al, for joining me today.
How you going, everyone?
So, I'm just going to start off this conversation with, with your journey and how you decided to start Simply Wall Street and what exactly it's all about.
Yeah, sure. That can be a very big question. So tell me if I'm going on too long. How long do I have?
Probably a few seconds, a brief about, how you started off. Yeah.
Yeah, sure. So very short background. I was a self-taught developer, so a programmer when I was a kid. I spent most of my childhood from age 12 to 18 making computer games. I was obsessed with that. And then that kind of continued. And when I started work, I taught myself investing, which most retail investors, or as we call them, individual investors do. And I found the experience to be pretty terrible. And so the natural thing for me to do was to solve that problem by writing software. So I started creating these tools to help myself invest. And then I realized that there was actually kind of a big market for this to help people, and that this is actually a really big problem all over the world.
I'm glad that you say that, because I've been investing for the last 20 years, and I found Simply Wall Street a year ago. Okay, it completely changed the way I do my intuitive investing. When I see something, when I feel a company would be good, I could just get on Simply Wall Street. You scroll down and say, hey, okay, this sounds good. Let me make an investment. So the decision making has really been shortened. Otherwise, I have to go to multiple sites, do the analysis of the balance sheet, P&L statement, cash flow, and all that. And many retail investors just can't do that.
Absolutely, yeah. And at the end of the day, like a lot of startups, it's the problem. I originally are solving the problem that I had, and then the startup's successful when other people have that problem as well. It's really that simple.
Fantastic. So, Al, you've been facing a lot of issues in Australia. After the bushfires, now it's Corona, and I don't know if you guys are on a complete lockdown or what. How is it that you're managing your teams now?
So actually, for us, it's been quite easy because being a technology company, and we don't meet our customers. Our customers are all online, and so already most of the staff were working remotely or from home every now and again. So when we heard about the lockdown, it was a pretty easy progression just to have everyone working from home. And it's actually been pretty kind of fun in a certain way. The only disadvantage that we have is we find it really good to be in the same place when we're trying to solve difficult problems. So that kind of those real collaboration moments. But everything else is pretty good. The people who have kids who are not at school anymore. I don't know if it's the same in India, but in in Australia, all the kids are studying from home, which basically means it's chaos. So often in our meetings and our stand-ups or team meetings, you suddenly have these kids walking in, all this stuff. But it's all fun. It's all pretty fun. So yeah, we're handling it well, and the market volatility is also very good for business. So that's going very well as well.
That was going to be my next question. You said it. So the markets are literally melting world over. What should a first-time investor do now, and how do you think that Simply Wall Street can help them?
What should a first-time investor do now? I mean, now is definitely a good time to get into investing, I would say. But most first-time investors do make a few mistakes. It's how you learn. So I think the main thing if you're a first-time investor is don't rush. Don't feel the need to rush. Biggest mistake. that you get this, I've made the mistake myself. I still make it sometimes. You feel this thing, oh my God, now's the time. I've got to move fast. If you ever feel that, then stop. Just take it easy. Buy companies for 5 years plus. If anything less, don't bother. It's tempting, just don't bother. That's the best piece of advice I can give people.
Fantastic. Now moving on to something personal. I hear you have a Bangalore connection. I do know you have a Bangalore connection, and I did speak to your wife just now. But I'd like our viewers to know how you're connected to India. How did you guys meet? What's that story?
Yeah. So you're right. So my wife's from India. Actually, she was born in London in the UK, but most of her childhood's been in Bangalore. And we did actually meet in Sydney. So she is also into startups, and she was running another startup at the time, and we met at a startup event in Sydney, and we sort of hit off straight away, which is awesome. And then I of course I started traveling to India fairly frequently, into Bangalore. And last year we actually got married in Udaipur, which was pretty crazy. It was amazing.
In Jaipur? Where did you get married?
In Udaipur.
Udaipur, lovely. That's a beautiful city.
Yeah, which was amazing. And we had all of our friends come over. It wasn't a huge wedding by Indian standards, but it was large by Western standards. And it was a bit of a nightmare to organize, to be frank, but it was totally worth it in the end.
Right, lovely. So, I have a disclaimer to make. So I have a personal investment in Simply Wall Street. So, I've been a customer for a while, and I've just loved the tool. So, Al, what I'm going to do now is I'm just going to share the screen and, tell our viewers how I use Simply Wall Street to make my investments. Okay.
Absolutely.
So
yeah, sure.
Just take a break. I'm going to share the screen and go on to Simply Wall Street and do a small demo.
Absolutely, sure. Yeah.
So ever since this lockdown started, I've been washing plates for the first time in my life. Not proud about it, but that's the reality. In India, we have a lot of help, and we have maids coming in, but with the lockdown and social distancing and things like that, we've not had the maids coming in. So I found a brand called Pril, Pril, and it's made by this company called Jyoti Laboratories. I also use a soap called Margot, because I like the neem oil bit in the soap. That too is made by Jyoti Laboratories. So, I started thinking about this company, and I was wondering, what it looks like post the meltdown. So I just go to Simply Wall Street, simplywall.st, and type in Jyoti Labs, and there it comes up. So there's this very easy to understand snowflake. There's an executive summary about the share, about the company. And, this is how the share price has moved. So it's really gone down significantly over the last few months. So all these are, beautifully laid out visual insights. You just don't have to open the balance sheet and profit and loss statement. And for someone who doesn't know anything about investing, look at this, the share price versus fair value. The current price is at 111. Fair value is at 104 based on the current, the analysis model that Simply Wall Street uses. You get the PE ratio. So you basically get everything, what the future growth potential is, everything. So this is one company I looked at. And then, I bank with ICICI Bank, for example. So I say, okay, I bank with them. I have my deposits with them. Can I own a bit of that company? So I go to ICICI Bank and click on that. And there you go.
So did you buy Jyoti Labs?
You have anything to add?
Yeah, I mean, that's a good little summary. Did you buy JT Labs, Jay?
Oh, yes, I did. I had it earlier, but I bought more. So
Right.
I'm a value investor. So I buy and I hold. I hardly sell. So I
Yeah.
make sure I don't put in more than 10 to 15% of my cash reserves in equity, and
Mm,
I don't sell. So
absolutely. Yeah.
that's
Yeah.
basically how I go about my investing. So I've got a portfolio that spans 20 to 25 industries. And
Mm,
I've been doing this before Simply Wall Street, but Simply Wall Street has just been a phenomenal experience because the speed with which I can take decisions has just
mm.
improved dramatically.
Absolutely. Yeah. It's probably worth just mentioning that our expectation is not that Simply Wall Street would be the only source of information for people's research,
Mhm.
but that it will save people a huge amount of time when, especially around fundamentals, which is, again, we share your view around long-term investing, focusing on the company that you're buying and not trying to get too worried about very, shorter term fluctuations. So the ideas that we help people with that, and then they can do that assessment quickly. But expectation is you'd still need to think about the company itself.
Mhm.
That's something that we can't really do for you. But yeah, and have it as a consistent measure. That's the problem that a lot of investors make, is they kind of go all over the place when they make their decisions, whereas we want to have that consistent view that you keep coming back to.
Correct. And I think what retail investors should really start getting used to is to stay invested. So, and if they've got to stay invested, they can't put all their eggs into one basket. So, if they're going to put all their eggs into the equity basket, when there are meltdowns like this, cash becomes a huge problem. And today, nobody is saying cash is trash anymore. It's cash and cash flow because
Mm,
without that, you just can't sustain.
absolutely, yeah.
So, do you have anything else that you can share with retail investors, and why they should get into the market now?
Well, I mean, I don't give people any. I never give people recommendations myself.
Right.
So, I think if people have the luxury and they have some savings that they're comfortable and etc. to go into the market now, then absolutely, now's a great time. A lot of people did feel that um, a lot of companies were fairly overvalued beforehand. Especially in the US, the markets were at an all-time high, and that's come down a lot now. So certainly it is a good time, but there's still a lot of uncertainty, so that's got to be factored in, right? Um, and investing in stocks is certainly something that you need to learn how to do, and there is volatility involved. You just have to be ready for that. And if that's not, it doesn't mean it's for everyone. It doesn't mean everyone should be doing it, but certainly once you get comfortable and the more you do, the more you practice, then it's really great. And that's one thing as well, Jay, that don't know if you mentioned, but Simply Wall Street covers every market in the world, the biggest one being the US market. So I don't know if you have a platform in India for that, but certainly most other countries now have quite easy access to US markets,
Yeah,
which
me
is a
too.
really great way to diversify your portfolio. That's can be a big mistake people make, is having everything in their domestic portfolio, say India, or here in Australia, a lot of people have their entire portfolio on the ASX.
Very
The
good
reality
point.
is the ASX doesn't have really that many technology stocks. So if you want to, go long tech, which for example I am, then you really need to be investing in the US.
Right, absolutely. So another thing I wanted to ask you about is, I think you have around 1 million plus subscribers now. Am I right?
We have over 2 million users.
2 million users. Okay.
Subscribers, we have, it's going up a lot this month. Jay will be getting the investor update shortly, but yeah, we've just gone over 25,000 actually, which is pretty good.
Fantastic. So 2 million users, it's a lot. And you do some work with Apple and Yahoo Finance, right?
Yeah,
So
we do.
you just talk about the AI engine that you use for the news that you generate. And I think the news that comes up when you search on Google is mostly by Simply Wall Street, because I'm probably because I've been using it, but the news is very relevant.
Yeah, most likely because Google does personalize your search results to what you click on. So if you've been using us a lot, you'll see more of us. But yeah, no, we publish a lot of content on news, and yeah, we have a very innovative way of writing that content using like an AI engine that allows us to cover a lot of stocks that basically just don't get coverage normally. And so that's where we like where we try and focus our efforts is trying to. Our goal is to actually write something, an update, some news on every stock every 3 months as a minimum.
Nice. And what fascinated me about Simply Wall Street before I literally pursued you and made that investment was the fact that customers have become your investors. Okay,
Mm.
in a day and age where startups are just burning through cash, they're hemorrhaging cash. I think that's something that is fascinating, and you're doing something right. So could you just talk about how your customers started getting excited and funded the initial growth phase of Simply Wall Street?
I mean, yeah, absolutely. That's an interesting story. So, um, hold on. Someone's trying to, it's kind of, um, yeah, it's an interesting story because basically what happened is we decided we wanted to raise some money,
Mm-hmm.
and we initially went out to venture capitalists, and there's quite a few in Australia. We always, from the start, when we first launched, had interest from users saying, "Can I invest? Can I invest?" But we had never thought it was would be sufficient to fill a decent size round. And at this stage, we knew we wanted to raise like 2 million plus. And so what happened though was that there was a news article that went into one of the really big papers here in Sydney, basically announcing that Simply Wall Street was raising money. And from that article, we had like probably, I think, about 15 people email us from our user base saying, "Hey, can I invest?" And we suddenly realized we're like, "Oh, hang on. Actually, we should be taking this more seriously. That the users there's a really strong demand." So we just then emailed that article to all of the users, which at the time was only 150,000, and said, "Hey guys, we're going to raise some money. Please express your interest here." And within 3 weeks, we'd closed the entire round of 2.7 million because the demand was just so high.
Fantastic.
Um,
You
so it
don't
was
hear
quite,
these stories too often, with many startups today.
yeah. And what's interesting as well, normally when you do that kind of funding round, you end up with a lot of investors. But in our case, we only had 12, so we required quite large check sizes. But it worked really well. And it was interesting because, normally when you raise money, you have to do a lot of pitching, you have to do a lot of persuasion, etc. But in this case, everyone's already a user, so they already know the product. So you don't need to pitch them on the product. What you're pitching them on is what the business is going to do and why you're raising. And obviously, yeah, that went really well. So no, it was a good story.
Yeah, because many founders who approach someone like me, for example, for an angel investment, they come up with obscene valuations. Okay, and there are hardly any use cases, so it becomes very hard for investors to actually make that decision, because there's no yardstick. Because I mean, let's say if the revenue is 100 and they're asking for 10, 15, 20 times revenue multiple, you wonder whether it's really worth it. So I think the message over here is very clear, that companies should bootstrap and get their act together to get the revenues coming in first. And the customer should really, really love the product, and then the funding happens. Unfortunately, we have the WeWorks collapsing, the Oyos collapsing, so many startups all over the place, just burning and hemorrhaging cash. It's actually sad, because that's value erosion right there.
Yeah, absolutely. Yeah. No, it's when you're raising money as a startup, the investors are really investing in the team primarily, and yeah, as you say, the customer experience, because that's what really counts. So if you try to use the multiples they won't make any sense really, because it's just disconnected. But at the same time, it's it's an interesting game. Like there's some startups where it's the other way around, where there's, you know, everyone wants to be in them. So it's just it's a supply demand game, you know. The gems are out there. It's almost like startup investing is like investing in the public markets, but just more extreme, because you really are looking for these sort of diamonds in the rough where everyone else has cast it away, and there's something about it that you contrarian about. You know, that's what's interesting.
Very true. So thank you very much, Al. That was a, you know, very, very informative chat. So you have a good night. Enjoy the rest of your evening. Yeah.
Yeah.
Thank you so much.
Great to speak to you. Okay.
Bye.
Thank you.
Night.
Bye-bye.
Thank you very much.